Hey, good morning. It's Roger Glenn, otherwise known as the Realtor Glenn, and I'm here today with Shane Burns, who's the branch manager for Union Home Mortgage.
Yes.
And we wanted to talk a little bit about current market conditions and the notion of trying to time the market. Now, I understand that everybody likes to play the real estate game, and you're either someone that owns real estate now,
Right.
or you're interested in owning real estate. And you are following interest rates and home prices and trying to figure out when is the right time to buy or sell, which in and of itself is not a bad thing. However,
Right.
it's a difficult thing to do. There are people that do this for a living with literally billions of dollars and the national economy on the line and major portfolios. And it's a difficult thing to do for many reasons. And so I typically recommend that people rely on real estate professionals
Yes.
and mortgage industry experts to get their advice as it relates to timing the market. So
Correct.
here we are in March of 2024, and we've kind of been through a period of time over the course of the last few years in which interest rates were historically, like remarkably, exceptionally low.
Right.
Then they increased to a point that really was still very reasonable in a historical context.
Exactly.
Um,
But
and then
felt
they-
very shocking in the current times coming out of a 3 and 4% rate.
Yes.
Because we went nearly double, right, in a very short amount of time. So that kind of put everybody on pause because they were concerned about where those rates were going to be.
Right.
Mhm.
And most people, I think now, based upon Fed policy, or what the Fed has at least said that they will do with benchmark rates, is that rates are going to come down again. And we had a little bit of a dip. We talked about this earlier.
Yeah.
Now they've gone back up a little bit, but we're still expecting the Fed in the third and fourth quarter maybe of 24 to lower interest rates, or at least for them to lower the indexes that would then
Lower interest
manifest
rates.
itself in interest rates.
Correct.
So everybody's trying to time the market. So where does that kind of leave you? Because you really don't want to take advice from, the person in the gym that pretends that they know everything.
Watches Fox News all day.
Yeah, exactly.
Yeah.
or your know-it-all neighbor, Bob,
Yeah.
who says, you shouldn't sell your house now. So I'm like, well, I don't know.
Yeah. I get a lot of phone calls where I feel like I am spending time educating clients because they do listen to outside sources that I don't know that always have all the facts correct. And of course, we as professionals in the mortgage industry are constantly reading the information that's coming out. We're paying attention to job reports, consumer price index reports. We're looking at what the feds are doing. And we are trying to gauge where we think things are going to go. And when I say gauge, it's a guessing game. There's folks that have been in this industry for 30 and 40 years that are a little baffled by how unpredictable interest rates have been over this last year and a half, coming out of the COVID era. And it's a new dynamic for our country as a whole. We've not gone through a crisis like COVID in our modern times. So that put a whole different dynamic on the real estate industry as a whole. And so post-COVID, we're all trying to figure out how the market is going to respond to what's going on, and it's not always predictable like it had been in the past. So, we're a little crazy some days on interest rates, but one of the things that we always say, today is the day to lock. If you're under contract, lock your rate in. You can always refinance. Again, we are in a historical normal price range on interest rates. It's not outside of the bounds of what we've seen for the last 3 decades, really. The 80s, we saw things that were over 18%. I was not a mortgage lender at that time. I was a child, but historically they were there, and 6 to 8% is kind of an average price for an interest rate. So there's no reason to let that scare you out of the market at this time. Demand is still very, very high. The inventory is still very, very low. And we all understand how the supply and demand chain works. So if you can afford to buy right now, it is the time to buy. You can always refinance that house, and you're going to be gaining on tax deferments, or tax write-offs basically, you're also going to be gaining on the appreciation that the house is still going to have, because as rates come down, the demand for houses are going to go up, prices are generally going to go up too, so you can capitalize on that as well. And another part of the dynamic that we have seen recently is because of interest rates and a lot of people backing away from purchasing right now, it's actually opened the market up to a lot more home buyers that may be a little more restrictive in the amount of cash they have for down payment, so they're able to use more of the USDA loan options, which is 0% financing. FHA is always still very viable. We're not in a market anymore where sellers are in the driver's seat when they come to choosing the buyers, and that was very much what we were seeing for those 2 years during COVID. So buyers are having a lot better luck basically in negotiating those contracts and still being able to use some of these stronger programs that are specifically geared for first-time home buyers.
That's a really good point that you make about the types of loans, because I think when people are talking about interest rates, they're thinking only conventional.
Yes.
So a lot of the buyers in the market are thinking, what can I do with a conventional? Whereas to your point, there may be some other types of loans that are available to them that the sellers are willing to accept that historically they wouldn't. I think that's a great point.
Yes.
The other thing that you said that I always tell people that are thinking about buying is, if you're waiting solely because you think interest rates are going to decrease to buy, just remember about those pesky laws of supply and demand.
Yes.
So as the interest rates come down, there's a high likelihood that some of the buyers who simply could not afford to purchase when interest rates went up, and prices have gone up too, so it's kind of been a double whammy for buyers.
Yes. That's
why we have a housing crisis, an affordable housing crisis across the country. But as those interest rates come down, more of the buyers are going to come back to the market, so it's going to increase the demand for probably the same amount of supply. Maybe supply is going to tick up because some sellers will come back to the market. So when that happens, the likelihood is there's going to be a lot of pressure on pricing. So you might get a better interest rate, but you might end up paying far more for the house. Or get terms that are not as favorable. So the point being, before you peer into the crystal ball and Google, should I buy or sell my home right now, just be mindful of the fact if you're waiting because of interest rates, you could potentially outsmart yourself.
Yes, for sure.
The other thing that I think a lot of people, you talked about the historical context of interest rates, and that's true. I think there are two things, and I'd love to get your thoughts on those. One is, people say, well, what if there's another 2008?
Right.
The other thing that you really have to consider is that historically, real estate has been one of the best and safest investments that you can make. Now, if it's your primary residence, you're deriving all kinds of benefits because you own, not rent.
That's right.
But even straight investment potential, there's not the volatility. And if you look at basically any 10-year period in the history of the United States, real estate has appreciated in value over time. So the takeaway from that, in my opinion, is that there really isn't a bad time to buy real estate because it's a finite asset. They're not making any more of it.
Right.
We always joke about that in terms of land, and
there will be no more land.
Right? And homes, and so there's some scarcity to it. And so buying today, I think the likelihood over any 5 to 10 year period of time, regardless of when you buy, is that real estate's still going to be another investment, or a great investment. 2008, is there going to be another 2008, Shane?
No. Well, we don't think so.
Oh, why not?
I mean, I have no, crystal ball. But so what happened in 2008 was it was an anomaly to our economy as far as the way they were allowing folks to lend, the push for everyone to own a home by our actual presidential administration. And so there were some guidelines that were just basically pushed to the side, and it allowed folks to buy homes with stated income, which caused a lot of defaults, because once those payments became due, they really couldn't make the payment. And they probably were not educated on, okay, maybe you are buying a $500,000 house, but do you understand what that monthly payment is going to be and how can you afford that? We don't we don't lend like that any longer. So the guidelines are very restrictive. If you have tried to buy a home in the last couple of years, you understand that, and you understand the level of paperwork that goes into it. And that is to protect everyone. It may feel very cumbersome at the time when you're in the process of buying a home. And believe me, as a lender, we're trying to do everything we can to streamline those documents for you. We don't want it to be cumbersome, but it's there to protect you and your investment and everyone else in the economy that's trying to be homeowners. So we don't feel that 2008 is going to be another factor in our economy and what it's going to do to housing prices. Given the lack of inventory, to your point right now, it's the opposite. We do expect housing prices to probably continue to increase. As interest rates come down, those demands are certainly going to increase because a lot more qualified buyers are going to be in the pool of purchasing. What's going to separate folks is how much cash do you have and where is the cash? Because being able to buy a home for 0% down or 0 down payment is very likely not going to happen when you're up against someone that has 20% to put down or even 5%. So, buying now with good assets, with good credit, and qualifying for these great programs that are out there that have not been able to that weren't quite as user-friendly when the market was so demanding. It's a great time to take advantage of that and to move forward. A refinance is, and we talk specifically about that in the conversation that I have with any of my clients is, do you spend money to buy your rate down now, or do you hold on? Let's find you a rate that you're comfortable with so that the monthly payment feels comfortable for you. But let's not put a lot of money towards buying a rate down when we are seeing, the Feds have even said they're going to lower rates. So we know that's coming, and much better to spend on a little refinance, spend a few $1,000s on that and get your payment down by a couple $100s a month, maybe 12 to 18 months from now.
Yeah. So key takeaways, it can be very dangerous to try to time the market.
Yes.
A lot of competition for that, a lot of volatility that really is unpredictable that the experts...
We can't even predict it.
Yeah,
so.
often miss.
Yes.
So be careful trying to do that. Now is still a great time for people to buy if you can afford to get into the mortgage. And the key that relates to, the key point that relates to is really rely on subject matter experts, realtors, mortgage lenders, and sit down and have those discussions.
Right.
And even if you're considering selling and you want to wait until you think the market's going to improve a little bit to sell, which is potentially the right decision for you to make,
right.
Sometimes it makes sense to talk to a lender ahead of time. Even if you're on the seller side, people don't think about that. They think, well, I need the loan, I got to talk to a lender, but not talking to a lender about the market and what's happening and what their take is.
And we talk about that a lot in the mortgage industry, how we typically say that sellers are 6 months behind the actual trends of what's going on in the market because they don't know. And so, and we saw that when rates really started shooting up in early 2022, the sellers were very slow to understand the changes in the market. Even though we were talking about it, and I know that our realtors were talking about it as well, they did not want to accept the reality of where things were headed. We were no longer in 3.5%, 4% rates any longer, so now we're at 6%, and it's going to make a difference in how people think about.
That's a great point.
The way they're moving forward. So
and some of the folks that wanted to sell
missed a
we're
prime
trying to wait
opportunity.
for the top of the market, and this slope down in terms of, unfortunately, increased interest rates happen so fast.
Yes.
They missed the market.
Yes, they did.
Yeah.
And a lot of those folks are probably waiting for those rates to come back down, thinking that's going to be the time to hit the market again. And I don't know that there's a lot of buyers out there. There are a lot of buyers, and they're chomping at the bit for the right home. If you have a great home, anytime's the time to sell, in my opinion. You might, maybe you could gain $10,000 by waiting. I don't know. I can't predict that for you. But overall, if it suits your life and it's the right time for you personally to sell, there's no shortage of buyers for homes.
Well, and if you're upsizing,
Yes.
right? If you're increasing the size of the purchase price of what you're going to buy, and prices go up,
Yeah.
you're going to end up paying that
More.
higher price for what you're buying. Now, if you're downsizing, I think there's a dynamic there where it may
Sure.
make sense for people to wait. But
Yes.
anyway, well, we appreciate your time and attention. We're cautioning you not to stare into the crystal ball for too long as it relates to timing the market, because you may go blind, and we don't want that. So we are here to help, and we can connect you to some resources and some bona fide subject matter experts on the things we've been talking about
That's
today.
right.
Shane, thanks for your time as always.
I appreciate it.
You bet.